Welcome to the Cryptosphere. This is Cryptogenic coming at you. In today's video, I'm going to give you the only technical analysis tutorial that you will ever need as an investor. Now, this applies to whether you're an investor in crypto or in stocks or in any chartable investment. I'm going to give you the only technical analysis tutorial that you will ever need. Now, you are invested in what you are invested in because you have a dream, you have a goal, you have an objective. Your objective is to make a profit, not just to make a profit, but to make substantial profits, not just to make substantial profits, but to build generational wealth, to enhance the quality of your life, of your family, and to provide for future generations. That's why you are invested. If you did not have that goal, you would not be invested. And what I am proposing to you today is that you do not need everything that technical analysis has to offer in order to achieve that goal. I'm going to teach you the basic amount of technical analysis that you need in order to increase the probability that you will reach your goal, decrease the amount of time it will take for you to get there, and decrease the amount of effort and sacrifice that you'll have to make to get there. Now, first, let me say this is not financial advice. I'm not a financial advisor. I'm not going to tell you what to buy or when to buy. I'm simply going to show you what we can discern from these charts that can answer those questions. And really the main question is, how do I buy low and sell high? That's really all it comes down to. I'm going to give you all of the technical analysis that you need to discern on your own, looking at these charts, how to buy low and sell high. It's that simple. All right, let's jump into it. I'm going to start from the very beginning. I'm going to assume that you have no technical analysis knowledge. If you do have technical analysis knowledge and you want to learn technical analysis for trading, that's going to be another video that I'm going to make. Technical analysis for traders is different because you need to be able to identify candle patterns, reversal patterns, continuation patterns, and so forth. You don't need that as an investor. And as an investor, all you need to know is how to buy low and sell high, and the charts can help you discern how to do that. All right. This is, by the way, I use Tradingview.com. There's a link in the description. I think every investor should have a Tradingview account, and you should have basic knowledge of how to use it. That's what I'm going to give you here today. So I just opened up a run-of-the-mill Bitcoin chart. It's a weekly chart. That W means that this is a weekly chart. What does that mean? It means that each of these candles, these are called candles, each of these candles represents 7 days of activity on the Bitcoin chart. Each of these candles. This current candle has 3 days and 7 hours left until the candle closes. These candles close at 5 p.m. California time on Sunday evening, and so this candle will close and a new candle will begin right at 5 p.m. California time, 8 p.m. New York time, on Sunday evening. Now, if you look at these candles, you see that there is a body, and then there are wicks on either end. Okay. So you can see that some candles have a long wick beneath and some candles have a longer wick above. Long wick beneath, longer wick above. Secondly, some candles are red and some candles are green. The red candles are called bearish candles. Where the body of the candle begins on top, bearish candles start at the top of the body and end at the bottom of the body. So this candle was from June 6th, 2022 to June 13th, 2022. And when it started here on June 6th, it started here at $29,925. And when it ended the following week on June 13th, ended it at $26,497. So where does the wick come in? The wick means that sometime in the middle of that week, Bitcoin went up to the top of this wick and then came back down. But this is the beginning point and this is the end point. Now the green candles are the opposite. They start at the bottom of the body and they end at the top of the body. And once again, the wicks above and the wicks beneath represent where it went in between the start and end of that candle. Okay, hopefully that makes sense. first thing I'm going to do is convert this chart by coming over here into the price section, right-click or two-finger click, and I'm going to change this from regular to logarithmic scale. What logarithmic scale does is it organizes the chart according to percentages rather than according to numbers. Now you can see the chart looks much different. Why is that? Well, you see $40 here. The distance between $40 and $120 is 300%. Likewise, the distance between $400 and $1,200 is 300%. So it's going to be roughly the same distance between $40 and $120 as it is between $400 and $1,200. Why? Because dollars and cents are not how assets work. Assets work in terms of percentages. It's not about did it go up $100. If it went up $100 from $40, that's a lot different than it going up $100 from $2,000. So I use a logarithmic scale, and that is important. Now, the first thing we can do now that we switch to logarithmic scale is come over here to this side, and I'm going to use a trend line. Click this here, and I come to the bottom over here. This is November 14th, 2011. Actually, I'm not going to come to the bottom. I think this trend begins over here on July 1st of 2013. And if I draw a line, I can see that we touched the line here, we broke beneath the line here, we touched it again here. I'm going to make it a solid line instead of a dashed line. So what we can see, if we draw the line this way, is that we are just above this line. Now, what can we see already? That we are still in a trend that goes all the way back to June 24th, 2013. This is history. We're simply looking at history, and all we did was draw a line under the bottom. And the goal in drawing the line is to see how many times do we touch the line. If we touch the line, we can break beneath the line, but did we break right back above it? Yes. That means we still honored that line. Okay? This is called a historic trend line, which means that if you go back over multiple years, if you were to buy Bitcoin every time it touched this line or broke beneath it, you did very well for yourself, didn't you? Right? And we're very close to touching this line again. So if you buy it at this line, which means that where we are right now, we've only been to 1, 2, 3, and 4 times before. Okay? So that is an important piece of evidence, but that's only one data point. Okay? Remember, the goal is to buy low and sell high. And already what we can see just by drawing this one line is that the definition of low historically has been at this line. Now, does that guarantee that we will not break beneath this line? Absolutely not. There are no guarantees in the crypto sphere. We could break beneath this line and stay beneath it for some time. All we're saying is the odds are, that's what technical analysis does, is it increases the odds of our success by looking at historical precedents. But we're not going to stick with just this one data point. We're going to add a couple of more data points to the mix, and we're going to do that by adding my favorite indicator, really the primary indicator that I use other than the candles, to discern what's happening in the market and where the market is going. It's called the Relative Strength Index. Another word for that is RSI. First thing I'm going to do is I'm going to go here to settings. Whenever you see this little thing, it takes you into the settings. I'm going to take away the moving average, the RSI-based moving average. I don't use that. I don't need that. That's all I'm going to do is deselect that. And now I've got the RSI. Now, what does the relative strength index do? Well, it's a basic math. It's a complex mathematical calculation. And what it calculates, basically, is the momentum. So here we're calculating the price. Here we're calculating the momentum. Okay? That's a basic explanation of what the RSI does. Now, all I'm looking for is convergence or divergence between the price and the RSI. What do I mean by convergence? Convergence is the RSI is moving up, and the price is moving up. That's convergence. It means that the price and the RSI are doing the same thing. The price is moving higher, the RSI is moving higher. However, when the RSI starts moving down, notice at what point the RSI started moving down. January 4th, 2021. On January 4th, 2021, the price was still moving higher. So notice that from this high to this high is a higher high, but from this high to this high is a lower high. That is called bearish divergence. And actually what we're seeing on this chart is that Bitcoin made 1, 2, 3 lower highs in the RSI, while it made 1, 2, and 3 higher highs in the price. That is divergence. It means that the RSI and the price are doing different things. This is the basic concept. When the RSI and the price are doing different things, it means that what's probably going to happen is the price is going to follow the RSI. If the momentum starts moving down while the price is still moving up, the momentum is telling us, the RSI is telling us, the price is heading towards the top. It's going to hit the top pretty soon, and it's about time to take profit. So my basic rule for discerning the top is that when you make your first lower high, when the RSI makes its first lower high, it's time to start taking profit. And by that rule, if that's the rule, then we started taking profit here at $58,000. If you waited, now here's the beautiful thing. The beautiful thing is this is a weekly chart. From here, January 4th, where the RSI hit the top, this is where we made our first lower high, February 15th. The price didn't hit the top until April 12th. So we had all the way from February 15th until April 12th. How much time is that? This chart gave us 56 days of notice that we were at the top. And we have seen this everywhere. In every chart, virtually every chart. When Solana hit the top, you saw bearish divergence in the RSI. The RSI started going down while the candles were still going up. And that was a sign unto us that we were hitting the top. We saw it on the sand chart. We saw it on the Luna chart. We saw it on virtually every currency's chart. That when you get to the top, you start seeing bearish divergence in the RSI, and that tells you that you're starting to top out, okay? Now, how do you know that you're at the bottom? Well, first of all, what we see historically looking at this RSI, I'm going to maximize this pane so that all we're looking at is the RSI right now. You see what happens? The RSI goes up, and then it comes down, then it goes up, and then it comes down. There's only a few times in Bitcoin's history where we've touched this line. This is the third time that we've broken beneath this line. What happens if you just buy, when Bitcoin touches that line? What if you just went back and bought Bitcoin every time the RSI touched that line? Where would you buy? You would have bought here at $173. You would have bought here at $3,421, which is even better than if you bought when it touched this trend line at $3,800. and you would have bought it here at around $20,000. Now, if you could go back and buy Bitcoin at $173, I'd say you'd be doing pretty well. It's actually lower than that, honestly. It's about $150. So you would have bought it at $153 here, and then you would have bought it again at little over $3,000. And now you'd be buying it again at about $20,000. The last two times we broke beneath this line, buying it there was a steal. So now we've got two data points. The first data point is this trend line. The second data point is the RSI. Shall we go for one more data point? Okay, let's do it. I'll give you one more data point, and then we're going to wrap this up. I'm going to look at another indicator called a moving average. Moving average. Boom. I'm going to go in and tell this indicator, going into the inputs, that I want to look at 200 days. And I'm going to change the color of this indicator to yellow, simply because I like yellow. I use yellow for my 200. And matter of fact, what I'm going to do is I'm going to add another moving average. And this time, well, where'd it go? Okay. I'm going to add another moving average. And this one, I'm going to make 300 weeks. So the yellow is 200 weeks, and I'm going to make this one red. The red is 300 weeks. So this moving average, what it basically does is the moving average says, if you take all of these candles over a 200-week period, basically 200 of these candles, average them out, this is the price. This is the average price over a 200-week period. The red line is the average price over a 300-week period. What you see is that going all the way back to 2015, September 2015, the 200-week moving average, even June of 2015, the 200-week moving average was support. We hit the 200-week moving average, broke beneath it, but broke back above it. We came back and checked in with the 200-week moving average, broke out. We came back and broke beneath the 200-week moving average and actually wicked down to the 300-week moving average and then recovered. And now we've broken beneath the 200-week moving average and we've tested the 300-week moving average. So we've got three data points now that say this is the definition of low. This trend line, these moving averages, and this RSI. Now, does that guarantee that we're at the bottom? No, it does not. There are no guarantees. But what it does is it increases the likelihood, it increases the probability that we are at or close to the bottom. Historically, if you bought close to any of these areas, you did well. So this is it, folks. This is just a simple technical analysis tutorial that says, here's how to use the RSI. Here's how to use a basic trend line or line of support. Here's how to use basic moving averages. And here's how to understand these candle patterns. And when you put all of that together, you've got a simple methodology for discerning with high probability where the top is and where the bottom is. The goal is not to buy at the exact top or the exact bottom. The goal is to buy as close to the bottom as you can and to take profit as close to the top as you can. And if you do that, you're going to maximize your profitability. You're going to limit the amount of time. You're going to decrease the amount of time, effort, and sacrifice that it'll take you to get there. And you'll be on your way to fulfilling your dream of building generational wealth for your family. Thanks so much. Hope this helps. Remember to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.